Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål and Ville. This is Fintech Daydreaming.
Hello and welcome to another episode of Fintech Daydreaming. My name is Ville. I will be your host for today's episode, but again, as always, I'm joined by my co-host and good friend, Pål. So, Pål, how is life on your end today?
Life is, as always, Ville, perfectly acceptable. It's good, it's happy. I'm starting to feel that winter is slowly coming back to Finland. It's getting cold, it's getting dark and rainy, and there's a lot of leaves falling off the trees. But to counter that, I'm very excited about the upcoming Mobi Forum member meeting we're going to in Stockholm in 2 weeks' time, I believe it is. So, a little bit of light travel ahead and meeting up with some fantastic banking and fintech friends, colleagues, and potentially new exciting networking.
Indeed, and I somehow feel that we've been giving so much endorsement to Mobi for we should get some kind of a carrot from them because again, they're fantastic meetings and we love them. But we have been talking about them quite a bit. But anyway, we will definitely be there. I especially love the fact that I'm hosting the Fight Club and you're doing a few things on stage as well, Pål. So again, should be a very, very exciting meeting. We're also hosting it at the Nordea premises in Stockholm, which is our Swedish headquarters. So should be a nice place to be as well for a couple of days with all my good networking colleagues and friends. All right, but good. Enough about the chit chat, and let's get on with our guest and the episode of today to get to the actual content of all good things in fintech. And in order to do that, we have invited one of the leading voices in the at least in the Finnish fintech scene, Jani Ristimäki from BearingPoint. Jani, how are you doing this morning?
Hi Ville, hi Pål. Thank you. I'm feeling very good today, and it's heading against the weekend. And as Pål said, winter is coming, which is always nice to get some snow at some point of time and get the chance to take my skis on the slopes again.
Yeah, indeed. All the Game of Thrones references aside, winter is indeed coming. But good, Jani. Again, really happy to have you here with us today to talk about a lot of interesting things that we have lined up. But before we get to all the good stuff, can you tell us a little bit about yourself? What do you do? How did you end up here?
Yeah, so my name is Jani Ristimäki and Senior Manager and Head of Financial Services Consulting in BearingPoint Finland. Been in banking and financial services space roughly 20 plus years now, since the beginning of 2000, late 90s already. So starting to be old man. Someone might take some insights from there. But yeah, mainly the last 7 years been in the management consulting in BearingPoint, focusing on the financial services. Before that, in OP Group, Nets, Luottokunta, operating mainly on the digital payments, digital banking, open banking space, doing strategy, M&A stuff, new business development, innovation, product and service development, but also implementing software and backend systems, doing market analysis and being hands-on on the different industry items. And currently, heading the financial services related consulting here in Finland, be part of our BearingPoint's global digital currencies and CBDC Center of Excellence, facilitating EBA's digital currency smart payments working group. Also joined the open finance or open banking working group at EBA quite recently. So that's mainly what I do on a daily basis and helping our customers to survive.
Indeed. And full disclosure, I'm also a member of the EVA Digital Payments Working Group. So I've been meeting Jani there. Part of the reason we also have you on the podcast is because we really wanted to have a discussion with you about many of these topics. But just very briefly, for those who might not know, what is BearingPoint? What do they do?
Yeah, so BearingPoint is a management and technology consultancy. In our current form, we have been existing since 2009. When the European management did the management buyout from the global BearingPoint company, which was listed in the New York Exchange at that time. But for the last 15 years, we have been European-focused, partner-owned, independent consultancy focusing on the digital transformation of the European corporates. And we are banking and financial services is one of our major segments where we have a lot of customers around Europe and also globally.
Interesting. I certainly have been running into the name BearingPoint very often lately. I don't know exactly why, but it seems to be a name that pops up everywhere these days, and I think we will find out today exactly why. But good. Before we get to the actual nerdy stuff that we love to do here on the podcast, of course, we have to do our tradition, which is that we will always ask our friends and guests to do a joke, which is hopefully fintech or financial services related. So, Jani, do you have a joke for us this morning?
Yes, indeed. I'm not sure if you have heard this, but why did bankers switch their careers?
No idea.
Any reasons, I guess, but which one is it this time?
Because they lost interest.
I think, have we had that one before, Paul? But nevertheless,
we've had ones along similar lines. A good one, an old one. Yes, we've heard similar jokes.
Indeed. I mean, the classics are, of course, always the best ones, right? So good stuff, Jani. Thank you for that. And also sorry for the audience for that, but this is the way we roll here. The worse the joke is, the better it is, according to our fans of the podcast. But good. Let's get on with it. And this discussion headline today that we wanted to have was basically around embedded finance. Again, this has been a topic very often mentioned here on the podcast, definitely something that we work on almost daily basis in our day-to-day jobs. And we wanted to kind of hear BearingPoint's and Jani's view into this topic as well, and perhaps we will find some interesting things to talk about how our opinions maybe differ in this space. But before we head into that, as a kind of a briefing and a reminder, so Jani, from your perspective, how would you describe embedded finance, and how does that differ from the way banking is done today in the digital channels?
Yeah. So by default or defined, embedded finance means kind of distributing the financial services by embedding them into non-FS customer journeys, meaning that banks and other companies are collaborating and serving the same customers. So in practice, that means that there's a new kind of business models which are based on an ecosystem rather than linear value chains as banking value chains has typically be based on. And but basically there's actually nothing new in this idea as such, because banks has done that in many years, and also insurance companies have distributed, for example, unsecured lending and insurance products together with the retailers for a long time already. But now, since customer journeys and our lives in general has become more digital, and different digital platforms are emerging and gaining popularity, so financial services can be integrated even more seamlessly in various customer journeys, especially in the digital life, but also kind of merging the physical and digital spaces, and create new kind of customer experience and bring the financial services more contextual, and that the customers doesn't necessarily need to go to the bank or the bank's channel to be served, but but the services are available for them on the right time, wherever they are and whenever they are.
Okay. Now, is this a new phenomenon, embedded finance, or how long has it been around, and how is it evolving?
Well, I think that as a phenomenon, it has been there since, for example, we can consider co-branded credit cards be some kind of prehistoric embedded finance products where banks and retailers are collaborating to kind of gain mutual benefits from each other, and so they mutual customers. But maybe when at the time when PSD2 was introduced and open banking was emerged, so then the idea of kind of having banks buy BAST and other players to kind of exposing banks APIs in a way that banks will be behind the curtains and not in the forefront of the customer relationship anymore. It was more kind of seen as a threat at that time, but I think from there the kind of idea started to evolve and emerge on the digital space more or less. But then I think there was some slower phase when banks were focusing mainly on becoming or meeting the regulation and regulatory requirements when we were heading towards the PSD2 deadlines, and the focus was shift more on the compliance at that time. But maybe now the market is more mature again, and the focus is shifting on the how to leverage the technology in building new kind of business, new kind of business models, and how to serve customers in a different way.
Yes, Paul.
I want to dig into that just a tiny bit, because a lot of discussions that I end up in around embedded finance tend to be fairly linear or one way, just like you positioned it. Embedded finance being about banks embedding their capabilities into non-financial platforms. We're also though seeing a growth of banks embedding non-financial products into their capabilities, again to enrich the customer journey. I think we've used Revolut as an example in the past. One of the interesting points that sort of comes up in looking at how we define embedded finance is whether we see this trend as being a part of the embedded finance umbrella as well, or do we say, no, embedded finance is only a bank making its capabilities available to a non-financial platform. And my argument to a certain degree is that it swings both ways, and it is still embedded finance under the same umbrella. It's just a slightly different shift on the business model. What do you think?
Yeah, and also kind of one, maybe a third aspect could be that which was also discussed during the open banking dialogue, that banks can enhance their product offering by leveraging the third parties like fintechs to bring their services to banks channels. So yeah, definitely it is included in there, but I think that maybe sometimes banks have a maybe too big kind of trust on that, how much they can kind of facilitate and manage the ecosystem, while in the end it will be the customers who are kind of deciding which platforms they are using. Maybe banks are in some certain areas have kind of power to manage their own ecosystem, but I would say that might focus on the kind of the certain area of our lives. Banks will never be super apps, I would say, at least in Europe. Maybe those are the other players where that kind of platforms will emerge. So maybe banks are not in that kind of position in our daily lives. So it is something that enables things and make things happen, provide funding, provide a safe place to store your money and or other valuables. But maybe on the some other players may have some different kind of platforms where banks can join, but not kind of in a managing role or facilitating role.
Yeah, I think that's a very interesting point, that not many banks, if any, have been successful in being a super app or trying to be a super app. The closest thing that we have here in Europe to that, at least in my bubble, seems to be Revolut, which already was mentioned once already in this episode. And even at that, I'm a very heavy Revolut user myself. I don't honestly use it for that much for things like booking travel or hotels, even though the rewards are fantastic that they offer around that. And the reason is that that's not how I operate. I go to a travel website to book my travel, or the airline to book my flights. I don't intuitively go to the bank to do that. And maybe that's one of the reasons why financial services institutions have not been successful in trying to create these super app experiences. The ones that are successful are always seem to be some kind of communities that already have a bootstrapped audience doing a lot of transactions in it, whether that's in e-commerce or transport or other kinds of things, subscription services. And then they embed financial services and others into those apps. And that becomes a more natural environment to a super app to be successful. But yeah, that's an interesting point. Yes, Paul.
Yeah, I think there's another dynamic in this as well. And without being derogatory to all of the banks, I think a lot of banks tend to be a bit arrogant. They've operated traditionally in a world where they mandate and dictate the rules of the game. You as a customer must come to the bank. You need to follow the opening times, the closing times. They've got dominance, and the only choice you really have is, do you go with bank A or bank B? And a lot of banks are still sitting on this traditional arrogance that says, well, it doesn't really matter because we're still going to control and we're still going to own. And like you have just said, Jani, the customers are starting to vote with their feet, and they're looking for unconscious banking capabilities in their journeys. And the banks aren't recognizing this threat or trend well enough, because they're still being arrogant about, well, banking will always be banking and there's not going to be a big change here. So therefore, the notion of building a relevant super app, particularly in Europe or in the Nordics, doesn't align because of this historical way of thinking.
Yeah, that is true, and maybe if we consider, for example, embedded finance, so and kind of the digital disruption or challenger banks, what is their strategy typically is that they are kind of approaching and addressing the underserved segments, which kind of are a little bit under radar of the big banks, and they quite easily ignore that. Okay, it's not a big thing for us. But maybe if kind of considering how the things evolve over time, and if that's only kind of a route for challengers to enter the market and build a good services and build their reputation and trust, and slowly start to become a kind of a credible option also on those segments which are controlled by the big banks currently.
Yeah. This brings up a good segue to the next part of the discussion I wanted to open up a little bit. So we established that the super app is not the natural environment to be provided by a bank, at least not a traditional bank. We also covered the fact that new customer segments are serving the underserved segments is maybe possible better to be done over concepts like embedded finance, because again, those customers are being served by other channels than banks at the moment. But that brings up the question: is this embedded finance phenomenon? I mean, is it a threat or an opportunity for incumbent banks? What are the opportunities, and what is missing from the banks in order to start addressing this embedded finance concept?
Yeah. So. First of all, I think that embedded finance as such is not kind of going to disrupt banking, but it's more kind of complementing banking and creating new opportunities for the banks. So there are banking products and services which will be served still through banks' own channels, for sure, and the banks will remain relevant, and banks are performing good in certain areas, and it is really hard to kind of challenge banks in many areas that they are operating today. But in some cases, it might be good to kind of evaluate that what is the impact of embedded finance to our business in our bank, and is it going to kind of redistribute the market shares of our existing market where we are operating at, or is it kind of able to grow some business areas that we are operating today, or is it going to create totally new business or market where we as a bank should try to reach out? For example, if we consider mortgages, so if kind of applying mortgage is embedded in the customer journey really nicely, and it is easy to apply a mortgage, I'm not sure if that is going to kind of increase how much we are buying houses or apartments. So there are so many other factors impacting on that. But if my bank's mortgage is available easily than the other, so maybe it is easy to select that mortgage. So in that sense, it may kind of redistribute the market shares and maybe open up gateways for challengers to enter the market. But then if we consider, for example, unsecured lending in a consumer space especially, so if it's easier to kind of apply funding for new sofa or TV, maybe we tend to buy more often new TVs and sofas or trips to Asia. So that kind of may also then increase the total market size in that sense, and kind of create opportunities for banks to grow the existing business. And then thirdly, if we consider that the kind of underserved segment, so that kind of partnership with other non-financial services providers can provide opportunities to kind of address those new markets with the new kinds of products by combining the data of bank and a non-financial service provider, and mitigate the risks in maybe a little bit different way, and in that sense create a new untapped market opportunities for banks. So in that sense, I think that there are threats, there are opportunities, and do nothing, from my opinion, is not an option, because that definitely puts you in the position that you need to defend, and you will lose something in any case. But yeah, then maybe the options for the banks aren't that what kind of stand to take. Do you want to kind of play the more defensive game or more offensive game, and in what extent, and how aggressively you want to kind of grow or reach the new markets in the new areas.
Yeah, so it sounds like it's both top and bottom line opportunity and threat at the same time. Paul, you had a comment.
Yeah, no, I fear that this is going to end up into a moderated debate between Jani and myself here. But I personally, from my perspective, I think that embedded finance, it's not a extension of existing business for banks. I think that it's a opportunity for banks to actually look for new business capabilities and business models. We are talking an awful lot around existing products and existing banking capabilities and making them available through embedded finance. But as we already said, we're making a shift where consumers are looking at this differently. The trends are different, and the engagement model is very different. So with that, I think that the opportunity for banks are actually about finding new business capabilities, new options that can be made available into the customer's journeys through embedded finance, rather than just saying, oh, this is another channel for existing products. So I think as we continue to move forward, where the real opportunities for the banks sit is to identify completely new ways of engaging with customers. Whether you see it as a good or bad example in the world, buy now, pay later was a great example of this, right? It was taking existing capabilities, reformatting them, and creating something completely new to simplify the process for consumers as part of their journey. And I think that's where we're going to start to see an explosive growth of embedded finance, is when the banks start to realize that actually this is a paradigm shift where I can look at new business models and new capabilities that I can drive for new revenue.
Yeah, I agree. And then of course you need to kind of evaluate that how big is the opportunity in the kind of the new business, and what is kind of the threat that you need to defend, and make a balance in between those. And in the end, what is then the new stuff, and what, for example, buy now, pay later, what's new there? Is it basically the same as the credit card has done for quite many years to kind of provide time for consumers to pay their purchases? So I see that as a kind of existing financial service that has been just put in the new frame and new wraps around it.
Yeah, I mean, I'm going to offer my third opinion as well. So especially on the buy now, pay later side, I think these things have existed since forever. Jani, you mentioned credit cards have existed. I mean, but it's a little bit different because it's like a single line of credit, which can be applied to multiple destinations, whereas BNPL tends to be either a store merchant or even product specific financing, and then installment payments built around that. But in my mind, the revolution of BNPL is related to two major contributors. One is that, like you mentioned, Jani, also before, the threshold of using these services, the usability and the convenience of getting BNPL arrangements has been made so easy that that has increased the usage of these things. Many times people pick that just because it's easier to do that than just use your bank authentication and strong customer authentication to do the payment, for God's sake. So it's and then that kind of convenience is ultimately the number one driving factor, in my opinion. The second one is the kind of the productization of the supply chain in a way. These installment plans were often offered by individual merchants and stores. So we had this famous hobby hall, for example, in Finland. I mean, for Finnish audience, you know what I mean. So they offered fairly high interest installment payments on every product that they sold, and it was very popular because they made it very easy. So again, what has happened is that BNPL providers have made it possible for any merchant to easily participate in these schemes, and then they can adjust how much of they're willing to pay for that extra cash flow by saying that, okay, we will sponsor, let's say, 5% fee for this BNPL arrangement, and then in order to give like free installment plans, and then they will kind of bake that into the prices of the products. We often see this in high margin businesses like design furniture and things like this happen, and that's why you get as a consumer, you get fantastic payment plans because of that. But again, the prices are so high that they're possible for them to do that. So again, the change has been technological and supply chain and convenience for both merchants and consumers that have driven that. But we digress a little bit here from the topic of embedded finance. I think Paul and Jani, I heard both of your comments, and I think there's no difference in what you're saying. But one thing that was mentioned earlier was basically open APIs and PSD2. So I'm going to take this back to a little bit of a technicality now. So we already have open banking. I mean, PSD2 made sure that every bank was mandated to open up APIs, and a lot of banks have moved forward to go above and beyond what's been required of them in PSD2. So there already is an API strategy, and many times I hear that we don't need embedded finance things or these fancy new concepts because we already have open APIs, and that is our embedded finance strategy. Is that the wrong way to think about these things, or are they actually right? Ultimately, this is about just APIs.
I would say that APIs and the technology in general is a must and as an enabler. So without that, you can't do it in a decent way. But I think there are many other drivers as well, which kind of drives the embedded finance go forward, and we need to kind of consider the whole ecosystem in a way, like we discussed about the embedded, the buy now pay later. So there you kind of solve consumers' problems to get time to pay, but also the merchants' problems to kind of bring easy to use payment and funding tools for their customers, which enables then retailers to sell more and grow their revenues. And so for the non-FS players, the key driver is to increase their sales and improve their customer experience and engage their customers more to their services by offering the relevant financial services in their customer journeys. And for example, according to Juniper Research, valuation of the non-FS companies that integrate financial services seems to be higher compared to their peers, which don't integrate financial services due to this positive revenue impact that embedded finance has on their business.
Right.
For example, one driver.
Yeah. So did you want to add something there, or?
Yeah, then of course from the bank's perspective, it's about kind of how to increase your balance sheet, how to get more deposits, how to get more loans and assets under management to your balance sheet, and what are the new channels to kind of gain that, and that's one driver. And then of course the end users and which platforms they are using and where they are present, then kind of defines where you publish your APIs, to whom you make partnerships with, and to whom you open your APIs. So I think there's kind of, you need to take a holistic view on the overall ecosystem, not forgetting the regulation either, because FIDA is coming as well, Financial Data Access Regulation, which is kind of setting the ground rules for embedded finance. So I think that the APIs is just a tiny but really important enabler in this equation.
Okay, so I mean, a lot of our audience are basically people who work in Nordic banks. We also have a global audience as well, but I'm sure they're facing the similar situation that I'm going to describe now. So I'm working in a bank. I'm with some decision power when it comes to how to proceed with the strategy of embedded finance and digital channels in general. I already have my open banking set up according to the regulation, and perhaps I've done something extra on top of that or not. But again, I have APIs already. And now my CEO is asking me, what is this embedded finance and what options do we have now that we have established that this embedded finance phenomenon exists? We are where we are with our open banking. What options do we have now? Obviously, the number one option, as always, is that do nothing. But that aside, what different ways as a bank I would have to address this new phenomenon, and how do they differ from each other?
So if we consider API as a product, so you need to have a strategy for the product, what problem it solves, what value it creates, and to whom, and then what is the addressable market for that problem space, and what kind of monetization model you can build on that product. So basically, if you have a set of APIs, then you should kind of need to consider that, okay, what value this creates, who are the relevant entities for whom it creates value, and what kind of business opportunities that creates for us as a business, whether to kind of address new markets or grow the existing markets and serving the existing customers or addressing the new segments. So kind of having really strategic thinking in the beginning, that where the business is it worthwhile to spend effort, and then to kind of basic business case calculation that if it pays off well enough to start pursuing those opportunities.
Okay, so you're saying that the bank should look what they have already in their portfolio, and then start to look in kind of case by case or product by product. How would that opportunity look like in the embedded finance space? That's at least the way I interpreted your.
Yeah, of course, but of course you need to kind of look out as well and listen to your customers. So what are the customers expecting from you, and if you have a kind of the product market fit in the first place.
Yeah. So what about the delivery then? I mean, what options do the banks have in terms of what role they should take in this? I mean, obviously one thing is to just offer the API, choose the partners who distribute those products into different channels. And I suppose the bank could go all the way of doing everything by themselves, moving towards the kind of super app strategy in terms of owning the entire value chain. But I mean, how do you see this delivery part of the strategy? What options do banks have there?
Yeah, so basically, it's a natural role for banks to take the producer role, to kind of produce the financial services and provide the kind of licensed services to third parties, maybe on a banking as a service type of a business model, where kind of banks are more underneath the customer relationship as an enabler. So and that is one really valid business model, which many banks are also addressing at the moment. Then the other end is what you said, that okay, we want to control everything and have the customer relationship controlled by a bank, and the brand visibility is really high. And then there are many variations in between these two different kind of co-branding models, which are relevant or available, and kind of maybe kind of deciding and agreeing with the different partners that what is the value that each of the partner brings into the table, and how to monetize that. Is it kind of banks can bring their capabilities, big super app can bring their customer base, both can bring some data, and then kind of when mixing up all of those, so what is the kind of overall value for the end customer, and what is the contribution of each different parties, and then defining the kind of the risk sharing, revenue sharing model based on that.
Yeah, sounds like there's a lot to do. We could dwell very deep into any of these topics. I'm especially fascinated by the risk and liability aspects of this new kind of embedded finance paradigm. But unfortunately, we won't have time. We would need several hours for that, and I believe our audience would be gone by the time we finish. So let's start to wrap up the conversation around embedded finance. I mean, Paul, you mentioned that you don't want this to become a debate between you and Jani, but so what are your comments around what we've discussed about embedded finance today?
I think we've had a really good discussion. I am holding back because we started the journey a little bit there around embedded finance. You talked about PSD2. And then the different models, etc. You know my position on this, Ville. You know that I have a fairly strong view on the platformification of the banking industry. I think there's a much bigger play to discuss here. To your point, PSD2, there's no competitive advantage in it. It's just regulation that you have to deliver on. You can't even charge for it. Then you can look at PSD2 and expand that a little bit and say, yeah, well, we can have premium APIs. Most banks have looked at premium APIs as saying, well, what else do we have existing as products today that we can API-ify and make available somehow externally? And we've seen for most banks, the return on investment is next to nothing because there is not a full value chain to take advantage of these APIs. I mean, the notion of we will build them, make them available, and they will come and use them, that sandbox life hasn't existed. And that's because, to me, this is a journey going towards the platformification of the banking industry, and embedded finance is just a step on that journey. We have to continue on this journey and progress, which also then means that for the banks, if the future is going to be platform-based, ecosystem-based, the banks need to decide how they're going to strategically engage into this going forwards. It doesn't mean that every single bank has to be a super app or they have to be a platform, but they do have to set a stake in the ground and say, what is going to be my role in the continued platformification of the banking industry? Is it going to be as a pipe? We know that in the telco industry, actually the telco providers make a lot of money out of being a pipe, but they don't deliver value on top of that anymore. That's up to the Apples and the Googles, etc., right? That enrich the life of the customers. But you take the pipe away and Apple and Google die in the telco industry for a certain degree. So I think it's really important for the banks to set their strategy, decide what direction they're going to go in. But then with that, what they need to do is to understand with this strategy and the roadmap I set for myself, how do I ensure that what I deliver, what I deliver is going to be of value to the ecosystem as it grows? And I think that's where the exciting part of embedded finance sits. It's about how do you take advantage of the new opportunities that are coming, and how do you turn that into revenue, most importantly.
I totally agree, and that is also kind of the big cultural change for the banks, which they shouldn't kind of misjudge.
No, absolutely. But right, that was just my rambling for a couple of minutes, Des. I'm sorry.
Well, I'm going to take the proverbial pipe away from you now for a second. Jani, because there's one more thing I wanted to talk about, and very briefly, since we're running out of time here. But Jani, you mentioned in the beginning, in your introduction, that you work with not only embedded finance and financial services consultancy, but specifically also central bank digital currencies to a certain extent. And Jani, we've had a lot of great discussions around this topic, and we could have another 1 hour at least episode just going around this topic. But I do want to have one final thing in this episode and just focus on one specific thing about central bank digital currencies, just as a kind of a treat towards the end. And again, let's try to keep this brief. And the question is that, do we actually need central bank digital currencies? I'm sorry for the audience, we will have to check CBDC definitions from outside of this episode. We're just going to go straight to the question, do we need central bank digital currencies? What do you think, Jani?
I think that definitely we need central banks, because that's the so far the best way how to ensure the financial stability and the price stability in the global markets, and in that sense, we need to ensure that central banks and the existing banking system is relevant also in the future. And there, the central bank money has a critical role to enable central banks to kind of enable that stability. Maybe we as a consumers do not need retail CBDC as such, at least in the markets where we are living, where the kind of cash has almost vanished and the digital payments, that problem has already been solved. But maybe there are some problems worth to solve still, especially in the B2B space, cross-border payments, talking about the automated processes according to Industry 4.0, for example, where the machines do the transactions instead of humans, and how to make those payments happen in real time and securely. And maybe they're kind of bringing the central bank money, especially the bank's reserves in their central bank accounts, better available on real time as a settlement asset for the cross-border payments, for example. So in the short, we need CBDC in some form, maybe not on the retail, but maybe wholesale could be the way to go forward.
I tend to agree. I think there's a lot of merit towards central bank digital currencies for the exact reasons you said. Central banks are the ultimate trust anchor of the financial system. And there is of course, there is benefits in taking that trust into a digital real-time ecosystems. So again, I think it's still looking for its form a little bit in how exactly it's going to get delivered. But I think it's an interesting journey to be a part of. But unfortunately, again, we have to wrap this up, and maybe we will have this CBDC discussion separately and leave this here as a teaser for the future episodes on this topic. But as we are rounding off, of course, we want to hear from you, Jani. What is next for you, and what's next for BearingPoint, and how can people find out more about you if they're interested in hearing what you're working on?
Yeah, so we are working on also in the embedded finance area and thought leadership there. So we are planning to write some thoughts on the paper. So stay tuned. There might be something coming out later this year or early next year.
Great, looking forward. And how can people reach out to you if they want to get in touch?
So you can find me in LinkedIn. My Twitter or X has been, I think, corrupted. I don't be there anymore. I still have an account, but it's not working, or at least I don't have access there. So you can reach best me in LinkedIn, and yeah, of course, from the BearingPoint emails as well. And
great. By the way, we had this discussion on a previous episode that, what is the new thing after X? Because everybody loves to say that I used to be on Twitter, but I'm no longer on X. And then we were joking that, maybe we should go on Truth Social or something like that, but maybe not then after all. So what I did just this week, I opened an account in Threads. I've not posted anything there, but I'm thinking it's a little bit more stable than X. So
I'm there with you. Yeah.
Keep you posted on the progress of Fintech Daydreaming presence on Threads in the upcoming episodes. Good. Pål, are you on Threads already? And what's up next with you?
I am indeed on Threads already, yes. I have posted on Threads and moved around in Threads. You need to keep up to speed with all the hip and trendy young people to make sure that, particularly when you have kids, that they are looking after themselves. But yes, so I am on Threads. As normal, you can reach me also on LinkedIn and those sort of channels, and at the moment I am avoiding Facebook, as someone decided to create a separate profile on my behalf, and I think they're trying to scam all my contacts on Facebook. So if you do happen to get a friend request from a weird profile under my name on Facebook, do please block it and report it.
Pål, are you saying you didn't really receive the 50 Bitcoins I sent you?
No, I didn't. No.
Oh, well, perhaps I shouldn't have listened to the guy on Facebook. Okay, good. Anyway, joking. I do not hold any Bitcoin, nor will I ever hold any Bitcoin. So thank you, dear audience. Thank you, Jani. Thank you, Pål. Fantastic discussion as always. Looking forward to hearing the feedback from the audience and all the comments coming in as well. This has been a great episode. You can reach us on YouTube, LinkedIn, Facebook, all the usual podcast platforms. Leave a comment, leave a review. It helps people to find this podcast as usual. With that being said, looking forward to hearing coming back in a couple of weeks. But this has been Fintech Daydreaming.
This is Fintech Daydreaming.